What's up, traders? Andrew O'Connell here with Pristine Capital. Today we're going to talk through the price action and we're going to preview the Fed meeting. Let's dive right in. S&P 500 finished the day down 0.44%. Our NASDAQ QQQ was the big loser on the back of a lot of these mega cap tech names that just got badly bruised today. IWM small caps were actually positive, up 0.14%. Our Dow Jones was down 0.31%. Our ARK Innovation ETF also managed to close positive. And our bonds, the TLT ETF, did finish up 0.69%. Volatility was mixed across the board. We had 58% advancers in the small caps. We had 65.6% up volume. So if you think about it, that's definitely a bit of a divergence where the SPY was negative, but we had a greater than 50% total up volume on the market. That's telling you right off the bat that the small caps were leading the market higher and those mega caps were weighing it down. The trend model remains at a +3 heading into the Fed meeting. We did have some earnings come out after the bell. Some earnings winners. We have Chegg, we have Match Group, we have Caesars Entertainment, and some losers. We had Zoom Info down 21.8%. Airbnb down 6.12%. That is inside of the daily implied move by the market makers. And take a look at this. AMD also reported earnings, and AMD ended up being up just a smidge today. For today's economic data, we got some global manufacturing PMIs. They came in a little bit better than expected. And we had our JOLTS job openings. They came in at 10.717 million, and the consensus was for 10 million shares created. VIX futures term structure is no longer inverted, and that is headed into the Fed meeting. Now, if after tomorrow's Fed meeting, all of a sudden this futures term structure does go ahead and it inverts once again, that's when we know we're not in Kansas anymore, and that's really where a bad result could come out of this Fed meeting. Finviz heat map. As you can see, mega cap tech, look at this. Oh my gosh, Amazon. How could you? Down 5.51%. Google also down big. But look at this. Tesla actually managed to close out positive. It was up 0.12%. And NVIDIA as well managed to eke out a gain. Now, it's very interesting. We had this company called ticker symbol RMBS. It whiffed on its earnings report. It missed on sales and earnings. And it ended up rallying today. Now today we're also seeing AMD. Reported earnings, whiffed the earnings report. It is also rallying in the after hours. So something is going on in that semiconductors group where the bad news is no longer translating into bad price action. Our sector map, what did we find today? Energy continues to be strong, up 0.97%. I saw a stat today, and apparently it was like energy's been up like 11 out of the last 12 trading days. Pretty wild stuff. What else do we have? The ARK Genomics Fund was up 1.27%. KWeb caught a nice bounce. And a lot of these social network companies, you can see this SOCL ETF was up 2.29%. There was some news of a potential TikTok ban. Who knows if that's just all talk, though. For our style factors, we had momentum style factor down a smidge. The growth style factor was down 0.95%. Best performer was international value. And then beyond that, high beta was up 0.45%. So that is definitely not something you would see if everyone's heading for the hills. The high beta is actually outperforming. In terms of trades, what did we do today? Well, in the pre-market, a few of us in our trading group were talking about, hey, we got this gap up in the market. This is really just a gift to sell into. So that's pretty much what we all did. I ended up closing out my Apple December 16th 150 calls for $10.50. I had paid $8.70 for those. Nice to book a little win there. I ended up reloading them later, about 2.5 hours later, for $7.10, $3.40 lower. And I ended up just scalping that for $7.30. I was like, I have no patience for this. I don't want to sit here on the desk. I don't want to hold it into tomorrow because of the Fed meeting. So let me just book that again. So took those off. And then in terms of common stock trades, I made an attempt at SoFi common shares for $6.33 in the pre-market. I had set my stop at $5.90. This is a one-start trade, pretty small, really just a starter. And it ended up closing that out for $5.91. My stop hit. So that was just wham, bam, out of that position, gave it a shot, and that is that. Now let's take a look. We're going to preview our Fed meetings. That's really what we're all here for, right? That's the big event It's looming ahead of us. Oh my gosh, the market's gonna implode. No, I mean, I think everything's gonna be fine. Just take a deep breath. And let's look at the probabilities rather than the narratives. So for the November 2nd, that's tomorrow. Now the B level players and the C level players and the D level players, they're thinking about, are we going to get a 75 bips rate hike tomorrow? Oh my gosh, what's going to happen if they hike 75 bips? Well, right now the market is pricing in an 81.7% chance that we are going to get the 75 basis points. So honestly, the market's not going to have a reaction to that. The market's already priced in. It knows it. What is important is the path of future rate hikes. So here on this slide, we have included the probabilities for the December 14th Fed meeting. As of right now, as of this moment, we can see that there is a 50.9% chance that we're going to get an additional 75 basis point rate hike. And there's a 42.2% chance that we're going to get a 50 basis point rate hike. So if the Fed, let's say they just signal, hey guys, inflation is a problem. We're willing to do whatever it takes. There's a good shot we're going to do the 75. Is that going to devastate the market? I don't believe so, because as of right now, the market's pricing in the highest probability that that is exactly what happens. This probability might shift a little bit higher. Maybe the market sells off a little bit, or the bonds sell off. But I just don't see that as being some like black swan, never could have seen this coming, because the market's pricing in over a 50% chance that it happens. Likewise, if they come out a little bit more dovish, if they say, all right, guys, it's going to be data dependent, whatever, really all that does is it pushes the puck out to November 10th. That's when we're going to get our CPI report for October. Now, in my humble opinion, I think that CPI report is really going to determine whether the market continues higher into the end of the year, or maybe this market peters out and we end up rolling back over. If, regardless of what happens tomorrow on Fed Wednesday, if they come out a little bit hawkish, a little dovish, whatever, if we get a really light CPI print and it shows, oh my gosh, owners equivalent rents are finally falling, and we got a huge deceleration, we're probably going to get the 50 basis point rate hike. If the CPI report on November 10th comes out hot, that's probably where we're going to get the 75 bips. So I think in addition to Fed Wednesday, there's going to be another event the following week, and that's really going to be our river card. So I think heading into tomorrow, I'm expecting some big intraday volatility. There always is. And most likely, if there is some big volatility, I will end up being a buyer of that dip. Now let's take a look here at our S&P 500. Let's look first at the dollar index. What did we see for the dollar today? This was kind of a heartbreaker. We had some nice red action in the dollar in the morning, and then the dollar ended up rallying back higher, and we put in a doji candle. Not exactly what we wanted to see, but I don't blame anyone, because we have the binary event tomorrow. Depending on what the Fed does, that could influence the dollar. 10-year treasuries, these were kind of weak today. We put in this awful looking candle. 30-year treasuries, we're seeing this same deal, looking not so hot. At least this one was a green candle, but we rejected off the 20-day SMA. Now let's take a look at our equities, and then we'll take a look at some of those earnings companies. S&P 500, I don't mind this at all. We had a really nice run on Friday. We took some positions off on Friday just because it was a little bit crazy. And now we've had a nice little digestion for the past 2 days. The 5-day EMA is caught up with price. We have this 20-day simple moving average lurking below, and we're above the 50-day simple moving average. The longer we can stay up in this 38.50 to 39.50 neighborhood, this 20-day simple moving average is going to start to move higher, and eventually it's going to cross above the 50. That's exactly what we want, and that'll indicate that this trend has some legs and it's continuing. It's not just some flash in the pan bear market bounce. NASDAQ looking kind of brutal, I must say, because this one's heavily weighted in the Apples, the Metas, the Netflixes, the Teslas. This one has just been super weak off the bottom. And the Russell 2000 has been a bit stronger, as well as the Dow Jones. There's been a ton of relative strength in the Dow. Look at this. Oh my gosh. Went pretty much parabolic there. Now, let's take a look at this company, RMBS. This is the one semiconductors company whiffed on earnings. And look at the candle that it put in. Up 8.85% on a high relative volume. And that's on an earnings miss. We noticed the same thing for AMD today. This one just reported in the after hours. Chart looks pretty horrible, right? But if we go to the after hours, now we're trading above the weekly value area. Look at this long lower wick. Oh my gosh. But yeah, it just goes to show something's going on in the semiconductors group. It looks like they could potentially be bottoming. There's another name I currently have a position on, this one, GFS. This one finished out the day positive, up 0.55%. And this one not looking too shabby. Again, considering some of these names are putting up weak numbers, not too bad. Another name that we are currently long, Shopify. This one is up 1.64% today. Granted, it put in a red candle, but managed to close the day strong. And then if you want to look at something that's super strong, SMCI. This thing's a juggernaut, up 3.26%. This one is trading back up almost to the prior all-time highs. So despite that weakness in the mega cap tech complex, there is some strength that is brewing under the hood. I think this Fed meeting is going to play a big part in if that strength can continue. Last thing I want to mention, we are heading into Fed Wednesday. We do have even more earnings coming up, so definitely watch out for those. That's primarily where I want to be focused. What's going on in the earnings season. That being said, best of luck tomorrow for Fed Wednesday. We'll see you all tomorrow.